think we'll keep it snappy. It's a very enterprising panel. And my fellow colleagues from almost the same industry, with the exception of a few. I would want to begin with a quote from Lenin, which says, there are decades where nothing happens, and there are weeks where decades happen. Now, this is a quote which is attributed to the change which we have witnessed over the last 5 to 7 years with respect to financial services in India. Now, it could be a mixture of banks, financial services, companies like NBFCs, which are essentially shadow banks, right? I think the topic today, and I get the opportunity to moderate, I promise I'll try and keep this conversational. Yeah. So the topic today is quite a mouthful. It says transforming costs into value, the digitalization advantage in NBFCs, right? So what we have witnessed over the last couple of years is how strong the NBFC space has become and how they are quite critical to the economy where white spaces exist where financing could happen, right? There are a couple of interesting points today, and it's an interesting group, who come in from diverse industries, meeting needs of diverse sectors, right? So that's a very interesting pick. So with no further ado, I'll jump in quickly. So my first question is to Ashwin. Ashwin, how has digitalization helped NBFCs transition operational costs into value? And what are the most significant cost-saving innovations implemented so far, from your perspective?
Hello, thanks for having me here. The way to think about it is think about the lending value chain, and whatever in the past used to be a manual verification, we have systematically invested in can that become a digital check, and can that be digitized? And so what we've consistently seen is, as we have personalized customer journeys based on segments, we are now seeing better conversion when a check becomes a background check as opposed to some human in the loop. So that's kind of the big thematic answer. So some examples of that: KYC, physical documents inspection, is now kind of digital KYC. There is video KYC. There used to be, for certain products, field investigation, where someone would show up at the customer's door. We now have something called self-FI, where the customer, we leverage kind of GPS location signals on the app, and we get the customer to take some photos, which we are then processing, and then based on that, algorithms either move the customer forward, or pass it on for a reference check. Another would be bank statement analysis. In the past, people would, and you can time me if I'm going too much.
No problem.
Yeah, just two more examples would be bank statements. Income detection used to be someone manually inspecting the bank statement and then filling it in. Now it's account aggregator or algorithms extracting the income based on bank statements that are uploaded. And then the other thing would be on the operation side, we've done a lot of investments in kind of agents handling customer service queries and reducing costs. So those would be a few examples I would say.
Interesting perspective, Ashwin. So I think largely to improve ROI, you have to take costs out of the equation. And that's where most NBFCs are pivoting to, primarily, especially for NBFCs which are non-deposit taking, where the spreads are very limited. So you have to operate in that space, right? So that's a very interesting perspective. Thank you, Ashwin. Right? Would I pose the same question to Aabhinna? Correct? Would you want me to repeat the question? So I'll repeat. How has digitalization helped NBFCs transform operational costs into value? And what was the most significant cost-saving innovation implemented so far, from your perspective?
So first, thank you for having me here. For us, the digitization has to come as an option because customer has moved digital and their time spent on devices has gone multifold. If possible, people could dream and sleep with their device on and have like 5 minutes of shorts and reels also to be consumed, right? Netflix may have said that the competition is sleep. Actually, it's reels and YouTube with shorts which are taking those tiny moments. And what is happening, why it's happening is because this is a reward the customer is giving to themselves from their life. First, cinema used to be the escape. Now these are the escape module. For us, when we try to reach them, say for example by a call, the first thing is cut the call. I don't want this unknown call, right? With say a true caller, I'm taking a very simple example and saying a name, being able to make it green, and now the new innovation which we are just trying to implement of video in the ads of Truecaller, right? For a customer knows that this is where I gave my information and this is the reason why we are calling is actually, so I'm telling something which is right now we are trying to solve. And it is giving us a tremendous uptake. We have been able to send video message on WhatsApp journey with one of the partner WebEngage, right? We have implemented that. And at each stage of the journey, we are sending a customized AI first video, which gets generated with the person's name, right? So the name comes and then the same video goes and the person is able to see on the ground, and this is happening in vernacular language. I'm able to say it in Hindi. It's the other languages are not as great for us. So this is where I'm saying, you know, at my boardroom, I am not saying, tell me the cost saved. I am saying, I am making those 35% of the user you could never reach. You are able to reach those extra 8%. And that is the profit. Digitization has to not be seen as cost. It has to be seen as growth. What the traditional startups have always done, right? That's how we are looking at it.
That's a very interesting perspective, Aabhinna, right? So I think I think I have time for one more impression. Ashwin, would you want to take a stab at that question?
Yeah, I'll say that this is not kind of a, I say it's an investment, not kind of a, can say ROI on what you do that one. So when you invest today something, so there is always better future for that one. Earlier days, if you compare, the major part we talk about is more acquisition kind of thing. Next part is kind of how to operationalize. Acquisition cost is everybody's major worry point now. Looking at a lot of fraud angle, time to market, and how personalized experience you can give this one. So all this technology and investments, what we do is for future ready kind of thing. Ashwin just spoke about that, how the account aggregator is helping earlier days, the bank statements and this kind of thing. FI is one of the major kind of threat to us, plus time consuming activities. Most of the people has to do field verification on this, but do we need to do field verification for everybody? And how the various checks can happen, and alert basis you can do that one. So those will be another kind of a saving, I'd say it's an investment, so that tomorrow when you want to scale, you don't have to worry about what is the manpower, the field power, or the agencies who are doing that one. So tomorrow you think of then start on this side. Other part of this AI kind of thing, lot of video KYC is now very kind of norms that everybody follow, and people have now acquainted that one. That is one of the fastest way to complete your kind of verifications and finish it up. Then a lot of frauds also happening on this side. So a lot of new technology also coming out. Now I was just reading one article, people talk about face match kind of thing. How do you identify this face, or it has been faked with something, or is that matching with your Aadhaar or wherever you have this kind of thing. And if I have this kind of recognition and this something fraudulent happens, so how other can leverage? Suppose now when you say that there's a blacklisted pin code, blacklisted number, something. If something identification, my biometric or this face can be identified as a blacklisted, that can be leveraged to the industry, what I see on this side. So those are the investment I see.
I think the perspectives are clear, taking out costs primarily to improve cost to serve and then thereby improve customer experience. Okay, moving on. What role does automation play in reducing costs and improving efficiency for NBFCs? How can it contribute to better customer experiences? Sameer, you want to take a shot at that?
Yeah, so customer experience is definitely the key point here, and that comes with a byproduct of giving you operational efficiency. while you do all these initiatives with the key objective of, bringing efficiency or streamlining the operations, but on the other hand, you are building a better and a good customer experience that itself leads to a scale up for your business. So that gives you a double edge on the both the sides. While you control the cost, at the same time you build the value, and that is primarily what we were trying to touch upon is, and I think so rightly touched upon by my colleague also, these are not the costs. These has to be looked at as a strategic inputs that are going into building a value in your entire supply chain, whether that starts from a customer acquisition and it goes even post disbursements also.
Interesting. Prashanth, your views?
Yeah, definitely. I would like to add to it. Not just NBFCs, right? I mean, any vertical today or any business houses for that matter, cost is definitely a one-time investment. But at the same time, right, if it turns it into more efficiency and leading it to customer centricity, and because it all that starts from the reverse side, customer centricity is the basic, right? I mean, it comes from that to the cost. So with that, obviously, I mean, like related to this particular vertical as such NBFC, customer centricity has definitely been the prime objective. There are factors like where 24/7 banking, right? And it all started from the ATM journey, now which has come just into your hands, right? So to that extent, obviously, I mean, cost is a long-term thing, but I think that's too a conservative word as such, cost. But at the same time, automation has led a drastic transformation, and it's a revolution literally. And that I think India as a country, we are leading that today, right? I mean, we have been an example globally by investing, I mean, not treating that as a cost, right? To leading it to forefront. Today, we have become global leaders in terms of especially digital.
No, I think very pertinent points, Prashant. I think if you look at many industries, as you rightly mentioned, NBFCs including, there is this rapid digitalization where it's almost, I was trying to call, my cell phone operator for a SIM swap a couple of days ago, where I wanted to just get the physical SIM converted to eSIM. I was trying to get hold of somebody. It took me almost 3 tries on the IVR before it actually prompted me to a human agent, right? Why that could be frustrating, but then that forced me to think that, am I doing something wrong? All that I was trying to check was actually available on the IVR. And I could actually get to that with a decision tree, and I wouldn't actually need to speak to a human, right? So I think that transition is going to take some time for a lot of people. I still get comfort in speaking to a human because of a certain comfort level that you have. But I think we will have to kind of let go of that and then trust the system. And you know what? I actually didn't get the option to speak to a human agent, and I did manage to convert a SIM to an eSIM, right? So I did manage it. So I think somewhere the journeys are getting simplified. So that's an example that I could think of. Avirup, your review?
Like to add to what you said, like a lot of customers wanting to talk to a person. What AI and ML-led innovations can work towards is telling that human agent what exactly to talk to a customer. For example, in our lending business, customers take loans for a longer tenure of period in the secured business for 15 to 20 years. And after running their loans for a good 2-3 years, they get offers from competitors. What they do is they check out their offers, and once they get a better offer, then they come to their home company, and then they say that I have got a better offer and hence I'm moving. By that time, when this happens, this entire journey happens, customer has almost made up his mind that he's already going to shift. By this shifting, it does not necessarily always benefit the customer in the long run from his perspective, while it may benefit the organizations from their origination perspective. How I would say AI and ML-led programs can work on is identify spending behavior of customers, looking at how much they're satisfied with their loan and how much their repayment capacity as well as their income has gone or changed since the time they've originated the loan. And hence, this ML program should be able to predict you that what is the optimum retention strategy to be done when the customer is eventually calling.
Correct.
So that is how I would say AI and ML-led solutions will go on in one in cost saving and second in improving the customer experience. One more example which I feel is necessary to give, and I think I find it quite funny at times. We have had bots automation of customer responses since the last decade or so. People put their messages on the social media about, I don't like this company, this is a fraud company. And then we have an automated response that, thanks for applying, you please reach out to us.
Context is missing.
The context is missing. With the use of LLMs and how ML technologies offer, we can now have those contextual replies in the vernacular languages that will enhance that customer experience and bring in additional revenue from the existing customers.
I think that's a great perspective. In my personal opinion, I think, and it's again a personal opinion, is that LLMs will flatten a lot of jobs. Only from a point of view that you have newer roles in engineering. I mean, I have technologists sitting on my left and right. They would agree that there is something called as prompt engineering, right? And I have new positions where I'm hiring somebody just to train the models or just to write the right query so that I could actually get the right output. Because that's an interesting view, right? Let me post this to Ankit. So Ankit, in terms of scalability and growth, how do digital platforms allow NBFCs to extend their reach without proportional increase in cost? This has been a classic play always. How do you decouple, your increase in costs when your revenue climbs? Because generally it's always a proportional relationship, right? So for every additional rupee earned, you would need to have that much costs incurred, right? That's something that all of us are trying to, these should be, optimized for. How do you think technology will play a role in decoupling where the costs are not linear?
Right. So I've been working with a lot of fintech startups and high growth companies, right? And I come from below the value chain of digitalization, which is messaging and your WhatsApp journeys, your emails, and we spoke about IVR and voice contextual messaging. And the first question when I kind of reach to any stakeholder or decision maker is, why would I add this cost into my already growing cost structure, right? So it's largely, the goal that startup or that organization or enterprise is looking at, probably the short-term goal. So costs are always aligned to what value you bring in and that end goal you're willing to achieve. So I have a little bit of a different perspective always, and I like to kind of, talk the other side of the story. We see a lot of investments going into acquisitions, more and more acquisition. But then we forget the end value chain of customer experience as a feedback, what comes in back to you. Sir spoke about, creating that experience of a true caller, and, that's the thinking all new age startups and the growth organization needs to get in. And that's when you show value to the cost you add. Because if I come up with a new channel or a new solution, obviously the IT procurement or someone sitting on the finance desk is thinking, why one more channel, right? But he's not understanding the pain the product team and the experience teams are going through. I have multiple messages on my phone because I liaison with a lot of fintech and NBFCs, right? I've availed like 5-6 loans just to know what's the journey going on, like a 50 grand or a 1 lakh or a 2 lakh. And while we are talking about cost and value here, the amount of messages, the amount of triggers I get on my phone, which is unwanted, right? You can save cost there, but nobody's thinking about that. Everyone's thinking about acquisition. I'm already your customer. Why send me more acquisition messages about the same thing? I'm not going to take the same product again. Send me something different. Send me something which I need. Now, when the need arises, you align it with innovation by, adding the value towards it. And then you align it to the cost by bringing all the stakeholders to decide on the table. So, centralizing the buying decisions is very important to get the value derived out of that cost. So that's my take on it. I hope I made sense.
Very, very pertinent points. I think it also supplements the fact that I think every year the cost of service or cost of ancillary services keep going up. And, contextual to NBFCs which do not have access to deposits, to protect your ROI, you'll have to ensure that any scale does not necessarily come in a proportionate increase in cost, for which you will have to use tools which will basically keep your cost structures where they are, and only have a marginal increase in costs for a disproportionate amount of increase in revenue. Right? That's the game. Otherwise, how will you
it's not
continue
always
to protect
about the
your
revenue.
income? Yeah.
That's what I say. It's not always about the direct revenue increase, right? It's about you're also losing customers while you deploy solutions.
Goes without saying. I was referring to purely from a numbers perspective when somebody looks at whether your cost of delivery is going up, and that's a metric I track, right? Does the cost of delivery go up with every additional rupee that has gone up in assets under management? That shouldn't be the case. So CIR and CAR are two metrics that I look at. I'm sure many finance professionals look at it, because that's actually a part of our board discussions, right? Where you look at these two ratios like a hawk to see what percentage of this is as a percentage of the total assets under management, and what percentage is this to your income, NII, right? So I think more contextually, of course, you're right. I think if I bombard stuff to customers, they may actually feel frustrated and leave. So
ultimately, it's a simple solution, right? Which partners do not really kind of give out, or the product managers sitting out there really do not care about, because all they need is acquisition. But then one check of me not sending more than 3 messages a day to a customer, that's it. It's not cost at all. It's a feature available freely for everyone to use. That's all it is.
Perfect. So Ashwin, this one's for you, because you're a products and an engineering person, right? So how do you think NBFCs can use digital tools to improve risk management, thus driving I'll repeat the question. How can NBFCs use digital tools to improve risk management, thus driving value while reducing financial losses and operational expenses? Any examples that you can supplement that with?
Yeah, I think we do a lot of this. So I think first of all, I think you need to set up the org. Function of innovation is a function of your org structure, the architecture. Does it allow fast experiments? And then the culture and the mechanisms you have, where you allow for risk taking, allow for experimentation. In terms of examples for reducing risk using digitization, you need to set yourself up for a lot of A/B testing, and at every part of the customer journey. I think someone earlier spoke to it. Personalize the journey. Not every customer segment needs to get the same journey. So that makes a big difference. And we have seen huge difference in conversion. When we have taken away friction, we see massive leaps in conversion. It reduces costs and invites positive selection. We've also seen improved risk when we have kind of personalized the journey, taken away friction while backgrounding some checks. So that's been our experience.
And I think interestingly, product teams are becoming, product and engineering teams have become, more so in our organization, it's two sides of the same coin. Like you rightly said, because unless you do a lot of A/B testing, you'll not really understand, and fail fast and fail forward is the underlying theme. And unless you do that in an agile environment, it's going to be very difficult to succeed, because there is significant and immense amount of pressure to improve time to market. How do you even do all that? How do you even optimize all of that? So I think that's a very pertinent point. Thanks for the views, right? Ayaskant, I'll come to you next. How do you think NBFCs use digital tools to improve risk management? Any perspectives that you can offer, especially someone like you who's coming from the cards business, right? How do you think these tools have helped improve risk management in your industry?
Yeah, if I take this point very clearly, risk management is going to be there always in the business. If you think that I'll improve the system, I'll put the system, tomorrow I'll be totally risk-free. No, it's not. The moment you are moving, this next step is always for there. So I always see early detection and the predictive modeling. These are the two things what is going to help. That means every day you have to understand how your underwriting partner and how you do this, and credit risking is happening. And then refine your rules, the BRE rules or whatever rules you talk about in the system, that has to be configured and has to be revisited on periodic basis. I leave it to periodic basis means how significant it is. Depending on organization, you can decide on this side. Next point is that more into early detection of the risk or the fraud or kind of probability of the fraud. I'm not saying all frauds, the probability of the frauds. It's not that I can take a very hard call that I'll not do sourcing from X or not give this business to this guys. I'm into card industry, so I may say that you will decide not to give a card to the X location kind of thing. But that's not. That is a hampering business. same location with the same kind of thing, but how do I filter out my customers and filter out my fraudsters? That is what the risk bounty is that. And the system has to be capable enough and matured enough. That's what I say, early detection and maturing of the fraud rules is going to be the key for the NBFC to succeed.
Very, very pertinent points. Avirup, your views? Any tools specifically that has helped you improve risk management in the industry that you operate with maybe use cases for the benefit of the audience?
So one is early, like sir said, about early detection of the customers, eliminating the extremes from your risk management perspective, right at the top of the funnel, which enables you not to, take in lot more customers at the time of login, increase that so that you are with one clear minimal effort, you can eliminate one set of customers. The other thing is continuous. How do you, while we are not end use monitoring organizations in terms of retail loans, how do you use non-traditional methods to monitor the performance of your loans on a regular day-to-day basis is, I think, how the key is to monitor it.
Great views, right. I think we did touch upon a few critical elements. I'll now come into a very important point, and maybe I'll pose this to Aabhinna. What are the key digitalization trends that NBFCs should adopt to remain competitive? To the same theme that I mentioned, especially for non-deposit taking NBFCs, even for deposit taking NBFCs, the pressures always remain. As Nitin Kamath always says, you're just one regulatory sweep away from disaster, right? So you don't know, right? While we have solid regulators and we work very closely with them, but for the improved for the larger good, there could be something that could really change your fortunes as an organization and the business model that you are. Of course, you can't solve for that, but largely, how do you remain competitive in the industry that you operate in? And supplement that, but what tools would you want to use, or maybe you're using today? And you did give us some examples.
A very interesting point here in terms of understanding, and let me tell you by 2 points. There were cabs which we used to get without the Uber and Ola world.
Right.
And we always had a problem whether it will be clean or where is the cab driver is and when he will come or not come, what kind of vehicle it will come, and then the aggregators solved it. Similarly, like for, I used to go to Air India website to book a flight versus having a Make My Trip, right? But we have to start seeing it as a wave of crust and troughs. Now, if you see the new Namayatri apps and all this, so Uber right now, if you book at a peak time, you will not get them, and they will not accept if it is less than a specific cost.
Correct.
So I come from Gurgaon, and if I try to book any cab from 4 to 5 o'clock in the evening, they will not accept it because 5 o'clock, the same rate of 250 rupees will become 430 rupees. So they will wait. So no premier cab will book it, right? While how Namayatri has solved it is you can give before booking, put a tip that you will give. So you can add like 30 rupees as a tip before that I am going to give you this 100 rupees tip. So they accept.
By the way, that's an interesting point, and
Right.
Unfortunately, tip is something that you pay in advance. By the way,
Yes.
you should be.
You should be.
That's how it started, but it transpired
Yes.
into something that you leave after you eat food.
Right.
So you are actually providing a tip to ensuring great service.
Yeah. So now what I am trying to say is, see, it's a cycle and we are riding a wave. So we are all sea surfers if we see on the digital world. If we see it as a mountaineer, we are going to fail. We have to change our philosophy thinking as a sea surfer. There is a wave which is going to come and then we will have to go down with the wave, right? And then the new thing will come. So I will tell you, IRDA on the insurance side just did a new change in regulation, and you said it and I was so smiling because they said now anybody can give back surrender their policy and 100% money will be given back. So I will just
There
tell
you
you
go.
for the audience, you all have an LIC policy. If every year you give a 1 lakh rupees LIC policy, your agent that uncle with safari suit who used to come to your dad, right? The traditional. He made 40,000 rupees from your 1 lakh rupees as the commission. Now, when you want to give back that LIC policy, you can't, because they will say you will not get 1 lakh back, you will actually get 80,000 back. So we continued paying it. Now, IRDA's new regulation says any life insurance policy, you have to give back full money. So a company like ours, BajajCapital, who is largest in life insurance offline, it means that the principal are going to reduce commission. So they say, first year we will not give you 40,000, we will only give you 15,000. Now, second year we will give you 30,000, fourth year we will give you 40,000.
Staggered. You don't know how the
So it is
customer will
staggered
respond. Yeah.
opposite. Now the customer becomes center, right? Customer now by default, and they are doing right to bring the customer at the center. But to change the DNA, they are looking at the digital team, tell me what to do. Because now we want to call the user for right thing, give them the right product. And the whole chain is disrupted now. And everybody, the 15% commission is gone. From first, same will happen when the data, the data regulation will come in. So here what we are seeing is we are implementing tools like right communication, right messaging, and trying to be as honest and to the point, right? Like, we were having a conversation. Everybody gave loan to Elvish Yadav, right? He had a great loan, and I'm saying Elvish Yadav because he is news. But nobody was actually taking a third-party data and seeing his YouTube video where he was flaunting cars. So if we actually had a snapshot of his YouTube videos where his father and he was going to a new house and a new car, right? We would have said, you are about to default because this your earning is not there. No banks actually took that third-party data of YouTube videos that they were posting live. So this is where the proactiveness of being a surfer will actually come in, because there is where the things are going to come.
Interesting views. I think I fully subscribe to that thoughts. Ankit, would you want to chime in with your thoughts on the same?
Can you just repeat?
Sure. Essentially, the tools that will help you remain competitive, in the industry that you operate, or the specific products that you offer today. Any specific enterprise
to the
tools?
NBFC industry.
Yeah.
I think the tools are evolving by the day with all kind of innovative startups coming in, and the legacy organizations looking up to new age technologies and startups. Digitization has a lot of segmented tools to offer, and it all depends on which segment your enterprise is catering to, right? So if you get into the NBFC, which provides minuscule loans like from a 10,000 to a 50,000 or a 1 lakh rupee range, I think vernacular communication, sentimental analysis, the need, the customer experience tools, all that matter a lot. But when you get into high-end and higher disbursement of loans, it's the personalized communication, it's the touch, and it's like you said, I want to speak to an agent. I need to be sure about the right product, right? So the tools are really dependent on your segment and your audience. But largely, I think with AI, ML was touched upon, the data science, the data warehouses you build, and what you learn about your particular segment, and then put a strategy behind the digitization process you need. Like some orgs may not need a video KYC, right? Because their target audience is lesser, like the number of customers are lesser, so you're okay to give that physical verification and do stuff. But some companies will need a video KYC for sure, right? So yeah, it's a decision you take depending on your business vision and your target audience specifically. So
and your views on how this will pan out over the next 2-3 years. Do you think technological tools will become more relevant to remain competitive?
Absolutely. I keep repeating a few of my thought processes, but we are all talking about artificial intelligence, and various industries are using it in various terms. But AI into basic communication and basic messaging is also going to grow like eventually really, really big. Uh, Simple examples like a voice bot really kind of understanding you, right? That's one thing. And at the end of the day, you see all the collection agency automations which are happening, right? We have a few partners here who are participating. Uh, I think those technologies will really evolve further and further. And like you said, it took you 3 steps or 4 steps for that IVR to complete your eSIM swap, right? That can be completed in like one press of a button. So that's where you will reach with a mix of tools. That's what I'm trying to say.
Interesting. I now go to Samir. Samir, what's your view on automation playing a role, my bad, in keeping NBFCs competitive? Now, what sort of examples can you give us where you've seen automation significantly improving TAT and also thereby helping you reduce, costs to a great degree?
Yeah, so on the TAT front, that is very evident now because we have all gone through that cycle by now, starting from the customer acquisition and where we, still we are fighting that battle because as all of us has touched upon, customer expectations are also changing. Earlier, one pager form used to be a very good thing to be get delivered, but today, asking him to punch the fourth field into the field is like a pain or maybe lead to a drop off. So it's a dynamic field, and this expectation will keep on going further from here. So from a customer acquisition till disburser, primarily all the tools that you can think of, your digital KYCs, your digital documentation, auto fetch of documents via account aggregators and all. While said all that, there is one very important piece which we somehow miss out in our lending journey. Lending is not only about giving money; it is about getting that money back also.
I think nobody says that. I think that's
even
lending
even
in a
our
nutshell.
discussion somehow happened to be kind of tilted more towards the customer acquisition side, but yeah, yeah. So
Everybody can lend. Who says no?
yeah, so while you have acquired that customer, there is a responsibility to get that money back also. And there also, the digitalization plays a major role because my COC, while we are more concerned with the CAC, the cost of acquisition or the CAC, whatever you call that, but my cost of collections for a digitally acquired customer, if you kind of nurture that customer well from the very first point he enters into your data lake, let's call that. From there, establishing that connect digitally and taking him through that kind of subconscious literacy, giving him all kind of a nudges, relevant nudges, and the right kind of a frequency at right time. Best time to send, best channel to send, all these things are almost solved by the technology today. You just have to be plugging them right in the right mix. So that tool mix has to be there, but that gives you a drastic drag down on your COC, and it further kind of creates a ripple for your field, because all the buckets, if you bucket X you are controlling, then you are creating a stronger collection force or a collection mechanism for the ground left, because they have to cover a limited ground now.
You're spot on because for a loan, I think the ticket size of loans have crashed
Right.
with the advent of digital lending apps. Imagine there is a 2,500 rupee loan which you will have to collect. You can't send a person to his door,
person on the
right? It is better to write it off than to collect because ultimately it just costs prohibitive for you to collect, right? So of course, so there is the bottom of the pyramid opportunity that we're talking about, but you also need to use technology to actually tap into making the income growth more efficient. I mean, you can grow income, you can grow the outstanding loan book, but the question is at what cost,
Right.
Let me just, thanks, Samir. Let me just take to Prashanth and ask a very different view. Somebody who's been in the computing business, the hardware business, however you want to call Lenovo. What's your view on how do you think this will actually transform over the next 3 years? And how do you think, your organization, somebody who's not from the financial services space, how do you see this?
No, definitely. See, while AI on the one side is making a lot of noise, right? At the same time, unless we don't streamline that to particular systems, right, where it gives certain comfort, either, I mean, both the side. I mean, if I have to relate that to this particular industry as such, right? One is lending and the collection, right? If it doesn't work as a balance in between, right? So that is where every organization or a tech companies are trying to achieve today, right? Because otherwise AI is a very generic, right? It's at a 35,000 feet height as of now still, right? So that is once we try and get this balance at either side, and obviously as and when the whole business cycle, right, also gets matured enough. So for that, obviously time is the only essence there.
I think it's all about separating the signal from the noise, because wherever you go, there is AI.
Absolutely.
There is AI even in tea. So I'm not sure what that is. That's
Correct.
just, I'm just joking, by the way. So tea shouldn't have any AI.
Yeah, that's right. So it just needs some more time, and obviously most of the tech companies are focused there. They know they have to come out with each of their USPs to offer, right? So that work is on still, but I cannot say that it is matured enough today to that extent. Over 3 years, as you rightly said, yes, definitely there should be a lot of maturity we're able to see there.
I think I've covered everyone. I think last one goes to Ashwin. Ashwin, your views on, as somebody who's been a technologist and a product leader, what do you think, is going to pan out over the next 4 years? How do you think, remaining competitive would look like? I mean, would it be more tools, LLMs, etc., which will basically propel growth, improving ROE, while, this will continue to flatten jobs, because a lot of road jobs, will get flattened and people will have to upskill. And that's something that we're seeing, right? I mean, we're seeing a glut of graduates, essentially trying to grapple with the change that we're talking about. What are your views as a technologist and as a product leader?
Yeah, I think 3 trends, time's up.
I know, that's the last one. Go on.
Yeah, 3 trends quickly I'm excited about. I think you spoke about personalization. I think we'll see more and more personalization come into play. Second thing I'm personally excited about is we've now built a data lake, and democratization of data skills. People will now be able to, don't need querying skills. People can ask natural language questions to our and get answers from a bot that we're implementing. Third, I think more and more AI agents kind of taking over or co-piloting jobs to improve productivity. I think those would be 3 big trends I'd see.
Perfect. Thank you. I think we've come to a full stop of the session. I think we have time's up. Thanks for the great panel. I hope the audience enjoyed it. Unfortunately, don't have time for questions, but I'm happy to take it offline. Thank you.